I am not a professional financial advisor. The information shared on this channel is for educational and entertainment purposes only and should not be considered as financial advice. Always do your own research before committing any money to the stock market. The stock market is evolving day by day, and artificial intelligence stocks are quickly becoming the most exciting opportunities. With the rapid pace of technological adoption across cybersecurity, enterprise software, and data protection, the right mid-cap AI companies have the potential to deliver explosive gains in the months and years ahead. And that's why today we are diving into 3 AI stocks that have the potential to make you rich if you catch them early enough. These are not random names picked at random, but stocks backed with solid fundamentals, strong partnerships, groundbreaking innovation, and the confidence of Wall Street analysts. If you're serious about making money in the stock market, make sure to watch till the end, and remember to subscribe and turn on notifications so you never miss an update on the hottest stocks in the market. First on our list is Qualys Incorporated, trading on the NASDAQ under the ticker QLYS. Qualys is one of the most important cybersecurity and risk management companies in the world, and its role in the AI space is only expanding. The company provides a cloud-native platform that enterprises use to manage vulnerabilities, ensure compliance, protect digital assets, and defend hybrid environments from sophisticated cyber threats. What sets Qualys apart is its reputation for cutting-edge threat research and vulnerability discovery. On the financial side, Qualys' Q2 earnings has remained solid. Revenues for the second quarter of 2025 increased by 10% to $164.1 million compared to $148.7 million for the same quarter in 2024. Net income for the second quarter of 2025 increased by 8% to $47.3 million, or $1.29 per diluted share, compared to $43.8 million, or $1.17 per diluted share for the same quarter in 2024. As a percentage of revenues, GAAP net income was 29% for both the second quarter of 2025 and the same quarter in 2024. Non-GAAP net income for the second quarter of 2025 was $61.2 million, or $1.68 per diluted share, compared to $56.9 million, or $1.52 per diluted share for the same quarter in 2024. As a percentage of revenues, non-GAAP net income was 37% for the second quarter of 2025 compared to 38% for the same quarter in 2024. Adjusted EBITDA, a non-GAAP financial measure, for the second quarter of 2025 increased by 5% to $73.4 million compared to $69.9 million for the same quarter in 2024. Operating cash flow for the second quarter of 2025 decreased by 32% to $33.8 million compared to $49.8 million for the same quarter in 2024. Out of 15 analysts covering the stock, the average price target is $140.54, with the highest forecast set at $158 and the lowest at $97. The average target reflects an expected upside of nearly 9%, but the long-term trajectory could be even higher as enterprises continue to prioritize AI-driven security solutions. With its strong presence in both the private sector and public sector, including an expanded office in Washington, D.C., Qualys is positioned for steady growth and increased relevance as cyber threats escalate worldwide. Next on our list is Globant SA, which trades on the NYSE under the ticker GLOB. Globant is not a traditional cybersecurity company like Qualys, but instead operates as a digital reinvention leader. The company specializes in providing AI-powered software solutions that help enterprises modernize, innovate, and adapt to new business realities. Based in Luxembourg, Globant supports global clients in media, technology, and finance, building AI-driven platforms that allow organizations to reinvent their operations from the ground up. Globant's financial performance reflects both strengths and challenges. For Q2 2025, revenue came in at $614.2 million, representing a 4.5% year-over-year increase. The company's pipeline reached $3.7 billion, up 25% from the previous year, signaling long-term demand. Its adjusted operating margin for the quarter was 15%, with adjusted EPS of $1.53 compared to $1.51 a year earlier. Cash and cash equivalents stood at $174.2 million, while net debt was $255 million. Free cash flow remained negative at $2.9 million, but this was a substantial improvement compared to a negative $28 million the year prior. To optimize operations, Globant implemented a workforce reduction of around 1,000 employees, or about 3% of its staff, which resulted in a one-time charge of $47.6 million, but is expected to deliver $80 million in annualized savings. For guidance, the company expects at least $615 million in Q3 revenue, essentially flat compared to last year, and at least $2.445 billion for full year 2025 revenue, representing modest 1.2% growth. EPS guidance for the year is at least $6.12 per share. While short-term growth appears muted, the long-term potential of Globant's AI integration strategy is enormous. Wall Street sees this potential as well. With the stock currently priced at $66.46, analysts have set an average target of $100, with the high forecast at $153 and the low at $71. This implies a massive upside potential of more than 50% from current levels. For investors seeking exposure to enterprise AI adoption and integration, Globant represents a unique opportunity to ride the next wave of digital reinvention. Last on our list is Varonis Systems Incorporated, which trades on the NASDAQ under the ticker VRNS. Varonis is a U.S.-based cybersecurity company headquartered in Miami, Florida, that has carved out a unique niche in AI-native data protection. Its software platform focuses on protecting enterprise data through automated access controls, intelligent threat detection, and advanced data classification. In today's digital-first world, enterprises are generating and storing unprecedented amounts of data, and securing that data is both critical and increasingly complex. Varonis leverages AI to simplify and automate these processes, allowing organizations to maintain security while reducing the manual workload on IT and security teams. Varonis' latest financial results were strong. The company reported second quarter annual recurring revenue of $693.2 million, an increase of 19% year over year. Notably, SaaS ARR accounted for 69% of the total, underscoring the company's successful transition to a subscription-based model. Total revenue for the quarter reached $152.2 million, up 17% compared to last year. Free cash flow for the year-to-date was $82.7 million, a significant improvement from $67.3 million in the same period a year ago. These metrics demonstrate not only top-line growth, but also strengthening cash generation and profitability. Currently, Varonis stock trades at $58.41. The consensus among 18 Wall Street analysts is an average 12-month price target of $62.18, with a high forecast of $70 and a low of $50. This suggests a moderate upside of about 9% from current levels, but the recent Wells Fargo upgrade paints a more optimistic picture. As enterprises continue to shift towards SaaS and automated AI-driven security solutions, Varonis is poised to benefit significantly, with its managed detection and response offerings serving as an additional growth catalyst. Combined with its deepening partnership with Microsoft, Varonis is building a robust foundation for sustained growth in the years ahead. Well, that concludes our list of the top 3 AI stocks to buy right now. Qualys, Globant, and Varonis are each driving innovation in unique ways, from cybersecurity vulnerability management to enterprise AI integration and AI-native data protection. They are mid-cap players with the agility to innovate quickly and the track record to earn recognition from both customers and analysts. Backed by strong fundamentals, strategic partnerships, and growing analyst support, these companies have the potential to deliver substantial returns for investors who get in at the right time. If you're looking to capture the next wave of growth in the AI revolution, these 3 stocks deserve a spot on your watch list.